Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the line with us today is Peter Krauth. He's a new guest to the program. We're happy to have him on. He's a publisher of Real Money Report. That's realmoneyreport.com. Peter, welcome to the program.
Thanks very much, Colin. Glad to be here.
Yeah, we met a couple weeks ago. You put together a great article on a new mining technology that we will touch on at the end of this interview. And we got to talking on the phone, and I realized you were a wealth of knowledge. You're very ingrained in the gold and silver sector, and of course, it's been 4 years of a bear market. You had some positive words to add when I asked you how much longer this can go on, and you talked about other currencies actually showing strength for gold, whereas the U.S. dollar, of course, is not. What's going on in the gold and silver sector right now, Peter?
Yeah, well, you know, the first thing for I think your listeners to keep in mind is that, at least my opinion is that I think we're obviously much closer to a bottom after 4 years of this kind of bear market action than anything else. And since gold and silver are priced in U.S. dollars, obviously it has some effect on their ultimate prices. I think over the long term, not so much short term, near term. But definitely, I think, the U.S. dollar and its strength will have some effect. So right now, I'm watching very closely the U.S. dollar index. From sort of early to mid 2014, it actually soared from the level of about 80 to 100, where we touched 100 twice earlier this year. We backed off a little bit. About a month ago, we were back down to 94. And in the last sort of week or so, we've been actually very close to and approaching 100 again. And that's certainly an important sort of psychological level. If we happen to bounce up at 100 and it acts as resistance and we move back down and start heading down, trending down, I think that actually could be pretty significant for as a support for gold and silver prices. If we actually go through 100 and head higher, then I think that will act as a headwind for gold. So I think that's a key level right now to watch, and certainly I'm sure a lot of technical traders and analysts are keeping a close eye on it. I don't follow things exclusively sort of on the technical side, but because I know that it is tracked very much, I certainly am keeping a close eye on what that does. So I think too, a lot of people watch the strength of the dollar, and it has a sentiment sort of effect on how gold and silver are priced in U.S. dollars. But I think also what a lot of investors, gold and silver investors, are missing is what's been happening in gold and silver priced in lots of other large important currencies. For example, if you look at the Canadian dollar, sure, gold priced in Canadian dollars is down from its 2011 peak by about 25%, but it's actually still up 5% over the last 5 years. In the Brazilian real, it's actually just recently set a record, an all-time record at 4,500 reals, which is up 75% in the last 5 years. In Indian rupees, it's down 25% from its peak, but it's actually up 17% over the last 5 years. And in the last 5 years, once again, in the yen, it's up 18%. In the South African rand, it's up 63%. And in the Russian ruble, it's actually up 68%. So it's clear that gold's in a bull market, perhaps not in the U.S. dollar, but it's in a bull market in several currencies, several relatively widely used currencies. So, it's perhaps misleading to just think that, gold is down because, many of us will look at it in U.S. dollars. I'm actually, guilty of that quite a bit myself. But when one takes makes the effort to look at it in lots of other currencies, it's actually quite healthy and doing quite well.
Well, the action in the U.S. dollar over the past couple of years has certainly been disheartening for gold investors. Unfortunately, so much is resting on that relationship between the U.S. dollar and gold. I mean, even for companies that are operating in these countries where the currencies are performing poorly against gold. Many of those companies are still listed on U.S. dollar indexes, and people still have in mind the U.S. dollar at all times when they're thinking about the price of gold. So I guess my next question is, do you think that the U.S. dollar index can crack, and when it cracks, you think it can go quickly? I guess what I'm getting at is, once this rally gets underway, it's been 5 years, it's been very bad so far. How long does it take for things to turn good again?
Yeah, I mean, I do agree that it can turn very quickly. I do think that if I had to sort of put odds on it, that we are more likely to see weakness in the U.S. dollar. It is probably more likely to actually peak at 100, or somewhere near 100. I think that the market's pricing in a rate hike by the Fed. We just got word recently, actually less than an hour ago, that was likely to be the case this December. And I think it's a bit of in reverse: buy the rumor, sell the news. And I think that if this is kind of what the market's waiting for, once the rate hike actually takes effect, then because that's been priced in already, I think that actually we could see gold and silver take off pretty quickly based on that.
A common theme that we've spoke about on the show for the past few weeks is we've looked at the HUI against the price of gold and said, wow, even though the HUI is higher than it was in 2001, when compared to the price of the underlying metal, it is cheaper by almost any metric, meaning the value of these gold stocks, particularly the ones that are operating and have decent cash costs and some cash in the bank, they're super cheap. We've maybe never seen them this cheap before. What do you think on the gold stock side, and does it hinge on the gold price in U.S. dollars going up for this to resume a bull market?
Well, I think that one of the sort of most important things for viewers to actually keep in mind is gold is hated. There's not much else that you can say, to elaborate on that. And that's exactly why they should be interested. Like you said, gold stocks are actually now cheaper relative to gold than they have ever been since the beginning of this bull market, if you go back to 2001. So, I think that the case for gold stocks is in fact extremely compelling. That doesn't mean that there's no downside left. So, investors still certainly need to be cautious, but there's no question. This is one of the absolute most hated sectors out there. And if you have the smallest sort of contrarian bone in you, you need to be looking at this sector. I really believe that.
Well, in the notes that you sent over to me mirroring what you just said, you said the case for gold stocks is very compelling, but still time to be cautious. So how do your readers get instructed to do that? How do our listeners, call it a sizable bite into this market while still being cautious? What do you suggest?
Well, I would say the first thing is, if you don't already own some, or if you feel you don't own enough, buy some gold, buy some silver. There's different ways that you can do that, physical gold and silver, of course. If you're looking at, for example, there's a particular ETF that I recommend in my newsletter. It actually right now allows you to buy gold at a 10% discount. That's not easy to come by. The reason for that is because it's a closed-end fund. And when sentiment is low, when sentiment is weak towards the sector, people actually are willing to pay less for the underlying value. So that's something that doesn't last. This ETF has traded at premiums up to 10 and even 15 and 16% in the past, and that typically was the case when sentiment was very strong. The markets will turn. That will come back. So just that sort of spread between a 10% discount to say a 10% premium on these holdings is 20% that's essentially baked in if someone is willing to buy now and hold for better days. So that's certainly one way to get started. I'm also looking at a mid-tier gold royalty company. Now, this company has outstanding management. They've had major past successes. They're actually very, very well cashed up, hundreds of millions of dollars of cash. They've got no debt. And that's one that I think is actually going to do extremely well over the next, say, 3 to 5 year term. Yeah, I mean, other than that, there's a really interesting, this particular company is not in my list of recommendations right now, but an explorer developer by the name Paramount Gold Nevada, they actually sold the previous version of the company sold off a property to Coeur d'Alene Mines. Today, their flagship is a project that they're developing called Sleeper. I've actually been down to Nevada on site to visit this project. And now, just sort of in a nutshell, what's really interesting and compelling about this company is this their cash position is at, say, about $9.3 million. The market cap is about 9.5 or $10 million. And a recent preliminary economic assessment on this flagship project values it at $167 million, with gold at 1,250 and silver at 16, because the deposit has both some gold and some silver in it. So anyone who's willing to buy this company at current prices is getting almost $1 worth of cash for $1 invested, and getting the entire development project for free that actually looks quite robust. So the value is just tremendous. Other than that, I'm also looking at a smaller mining / technology company. Now, what I'm really excited about here is this company has its own mine. It's looking to develop in Quebec's Abitibi region, but next to that, what makes it really different and compelling is they've got a mining innovation that's equipment that they've developed themselves. It's a technology called thermal fragmentation. And to sort of cut to the chase, to tell your listeners what the big advantages are, is that because it's such an effective way to mine, especially narrower veins of gold, it actually cuts costs about 50%. It cuts time of extraction to a fraction of normal mining methods. And it actually cuts down the ore that's extracted to get equivalent amount of gold down to about 20% of what traditional mining methods require. It's also very environmentally friendly. It's actually very low in terms of water use, power usage, and processing and milling is also, once again, a fraction of what traditional mining methods are, because the process of extraction actually produces fragments that are somewhere around 0 to 13 millimeters. So processing, milling, crushing, all of that side of treating the ore is much faster and much less expensive. So the costs, that's how you get to costs to produce gold at, as I say, somewhere around the 50% range of traditional mining methods. So this company, Nippon Dragon Resources, the symbol is NIP. Very, very exciting and very compelling. I think that this is certainly one. It's certainly it's a smaller company. It's going to be higher risk, but the potential is actually tremendous.
Yeah, and what you're talking about is really a game changer. And in fact, the reason that we came into contact is you wrote up a great piece on Nippon Dragon, highlighting the technology. It was a company I'm familiar with, and the market recognized the value that you saw, and the company is up a couple 100% since then, which is great to see for any mining company in the bottom. But really underlying what you're talking about here is you can be cautious right now investing, because not only are the bad companies cheap, but the good companies are cheap, and there's a lot of good stuff out there. Peter, I want to ask you about a new website that you're putting together, which is going to be much of the content we're discussing here and more. It's called realmoneyreport.com. Maybe you can start off with a background on yourself and how and why you found yourself in the mining sector.
Sure. Well, I've been researching and writing on resource stocks for years already. I've actually, through previous research and services that I've worked on and produced, edited. I've helped people make, from tens to hundreds of % returns in resource stocks. In fact, even at one point, going back say 2 years, we shorted gold and in one trade did somewhere around 400% return shorting gold. So, I decided to set up my own website and research service. I write a weekly email commentary that's completely free for current stock picks and recommendations. Anyone who's interested would be able to the website www.realmoneyreport.com. And in the subscription section, there's the ability for readers to subscribe there and access the newsletter. They would have all of the research that I do, all of the background analysis with stock picks, and accompanying that, you've got sort of weekly email alerts, rationale for trades, and so on. And I think that commodities, precious metals in particular, as I said a little bit earlier, really tremendous value these days. If you are looking for value in the market, and if you're looking for a contrarian approach, it's really where there's going to be some tremendous money made in the next over the next few years, especially the next 3 to 5 years. There's just and we've seen it. It cycles. It turns. I believe we're actually at or very near a bottom where it's about to turn. And again, the potential is very compelling, and it's an exciting time actually to be looking at this sector.
Yeah, and I think that seeking educational information and expert advice from somebody like Peter is very helpful. I do it myself. The more digging that people can do for you, the better that your choices are going to be. Peter, I want to ask you if you have any additional information or ideas or thoughts with the market the way it is right now before we end today.
I think that something to keep in mind is we tend to focus a lot on the daily. We tend to focus a lot on the very short term. I think that it's probably a mistake, especially when it comes to this whole sector. And I'm going to say precious metals in particular. I don't think that there's a way for central banks to have gotten away with all of the money printing and all of the quantitative easing and the low rates that they've had for 7 years at this point, at least as far as the Fed's concerned, without there being eventually the reaction that they're actually looking for, which is inflation, and probably at some point considerable inflation. And we know historically precious metals do extremely well. So the setup is building up. It's really setting itself up for an ideal scenario at this point. So I think that if anybody wants to look at the sector more closely, and even if it's simply to prepare oneself for a proper hedge, precious metals are definitely the way to go, and worth looking at very closely.
Okay, thank you so much, Peter Krauth, everyone. He's the founder and publisher of Real Money Report. That's realmoneyreport.com. Peter, thanks so much for all of your thoughts for our audience today.
Colin, thank you. It's been a pleasure.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?